Welcome to the Fintech Frontiers Podcast, where we explore the cutting edge of financial technology innovation. Today, I'm thrilled to be joined by Dominik Hertig, the founder of the i2 Group, a fintech software company based in Zug and Zurich in Switzerland. Dominik, great to have you on the show.
Thanks, Stephen. Thanks for having me.
It's a pleasure. I understand you've had an interesting journey transitioning from being a lawyer to launching your own fintech startup. Can you tell me how that came about?
Yes, of course. Basically, when I was working as a lawyer, I always had the need to do something for myself, to be an entrepreneur myself. Once my colleague, my former classmate, came to me. We met at a burger place. That was back in 2016. We were, let's say, 4 years into our standard jobs or normal jobs after university. And he basically came up with an idea to start our own investment company, or not investment company, our own company. And we talked about 1-2 hours. We find it very interesting and said, let's try this. But as Swiss as we are risk averse, and we always said, let's not quit our jobs yet and start with doing it on the evenings and on the weekends.
Very wise.
So we started with our own money, investing in this new phenomenon called alternative lending or digital lending. Each of us had about 5,000 to 6,000 euros, which he invested. And 9 months later, we came together and basically compare notes. And as you can imagine, we thought it's a good thing to invest in this idea we had.
Yes.
But we were still not really confident that we could do it like the US does, just quit everything and start it from zero. So we started slowly.
Yeah.
We incorporated a company in 2017, which where we still had our normal jobs. We did some, not marketing, but we went to family and friends, asked them whether they want to get a nice return in this, and then we started with family and friends money for about 1 year. We started quite to grow, and we had interesting chat with family offices as well. They wanted to invest with us, and
Great.
so we then in 2019 we said to ourselves, we cannot handle both our normal jobs and the startup venture, so we need to decide on whether just to say, let's take our earnings and we still keep our normal jobs. We scale down the alternative lending idea, or whether we want to go full throttle with the startup. And so in 2019, we decided that we want to go all in.
Yeah.
And so this is basically when we professionalized the company we had. We made a proper investment setup with segregated companies for the investment part and also for the IT software part and the operations part where all the employees are employed.
Great. So yeah, thanks for sharing that part of the journey. It can be a particularly difficult one, but it sounds like you managed it quite well. Can you tell me maybe at this stage, Dominik, what did you see as being the big problem that you wanted to go out and solve with your business?
Certainly. Basically, the private credit back then had two main issues which we saw. One was that it is not as digital as it could be. So a lot of work was still done by Excel. So the asset manager, particularly in the private debt field, received an Excel where it shows, okay, your loan made X amount of interest and we had X amount of fees, and then it was sent over once a month, and the asset manager had to put it into his system. Because when there's a financial product involved, then you always have to report and you're obliged to some reporting standards.
Yes.
And so the asset manager then needed to crunch about 50 Excels or whatever and put it into another system to get it then to the authority, to the financial market authority or financial conduct authority. There's a lot of room for error or fraud or manipulation. And we thought, why, and we were also a bit lazy. So we thought, okay, why crunch Excel all day long when you just can automate it, standardize it, and then make it available for yourself, but also for example, an auditor.
Great. Yeah. So is that basically a kind of a SaaS B2B platform which is designed to make asset managers' lives easier?
Yes and no. No, because it started early. It started for ourselves. So we only said we need the software for ourselves to track basically every investment we made for ourselves and to make life easier for the auditor, but for our own auditor. And this is very important because from day one we involved our auditor Grant Thornton in the process and asked him, when you have a credit portfolio or a credit fund which you need to audit, perform the audit on it, what do you need? And then he told us what he's required to check and with third-party verification or documents he needed. And we all put that into our software. But it was always the intention that we only need it for ourselves because basically we were the ones who decided on which investments we made, what countries, which business partners we use. And so at first we said, okay, let's have a easy so software doesn't need to be or look good. We need to be functional. And now we basically have added new features because we see a need in the market that all these credit funds which still use Excel, they either they need for themselves a proper software or they are even required by the Financial Market Authority to use a software because Excel is just not the solution for the future.
Okay. So it's got that RegTech element to it, making it easy um, for entities to file their reports. Okay. But you were focusing it initially on your own investments.
Exactly. This is basically our other, as I said in the beginning, we're a fintech. So one of the pillars is also the financial part. So this private debt or alternative lending. So what we did is we built either by our own or established by our own a note which we issued, which investors could subscribe to. And together with business partners, we established called AIF Alternative Investment Funds, which investors can invest to. And through these financial products, we receive the money, which we then will invest into lending companies to issue loans to borrowers.
Excellent, excellent. And so, like, are your investors, do they tend to be, have you got a small number of high value investors, or is it a large number of smaller, or a mix?
Basically, as it is a financial product, we do not know who actually the investors are, but the products are only for professional investors because it is still an area, the private debt area, an area which is not common to the standard retail investor. And the AIF is in its core laid out for professional investors and not retail investors.
Okay. So they're accredited investors,
yeah.
But they're able to access it. They're able to put their funds in without you knowing the identity or the origin of the funds, provided that they're accredited. Then they've been kind of cleared by the FCA, is it? Or?
They basically all the financial products have a so-called ISIN number. So, for example, if you buy a share of, I don't know, UBS bank or whatever, then you can make this online, and so can the investors of the AIF. They just put in order with their bank or asset manager, and then they book it into the portfolio. And we only see then that, for example, we've got an inflow of 1 million, but we don't know who it is. We only know it's a professional investors.
Great. Cool. Can you give me an idea about the scale of the assets that are made available to lenders through your platform?
I mean, overall, we have about 40 to 50 million. This is dispersed on several financial products. At the moment, we have one fund which has a European focus. Yes. So this fund is highly diversified and invests in several or in several different loan types in several different countries with several different lending companies.
Yeah.
And then we have two funds which are more Swiss focused. One, they have a Swiss real estate, subordinated real estate
Yes.
backed loan, and one is an SME loan also for SMEs in Switzerland.
Okay. And so is it mostly unsecured lending then, and it's in kind of different markets and different kind of loan types?
Mostly unsecured, I would not agree with that because, for example, the Swiss Real Estate Debt Fund, this has a real estate as a security, so these are secured. And with the other loan types, it really depends. Consumer loan is unsecured, but we also have their car loans where the car acts as a collateral of the loan.
Okay, great. And so fantastic. It sounds a little bit like what Mintos are doing to a degree. Do you come up against them in the market at all, or?
Mintos is basically one of our platforms which we use. So we disperse the funds we receive from the IEF into Mintos lending companies. So through Mintos into their lending companies. So
Right.
we're not really a competitor to Mintos, but rather business partner of Mintos.
Great. So you're kind of a bulk provider, because I know that they also have unaccredited investors, but you're okay. Excellent.
Exactly.
And so that's one of your kind of places where you deploy your capital is into Mintos. Do you have a direct go to market as well, or is it with a portfolio of operators that are engaging with the lenders in the countries, or how does that all work?
Basically, we started out with platforms such as Mintos and many others.
Yes.
When we started back in 2016 until 2019, when we established a little bit more professional structure with the investment vehicle, we tried out every platform there is. So we wanted to get a little bit the feeling of the platforms, how they operate, were they for real or were they a fraud?
Yes.
We also had some defaults because some of them were actually frauds.
Right. Well,
all in all, we made our learnings and we shifted a bit our focus from only use such platforms as Mintos, but also go directly to lending companies.
Yes.
And have a special setup. We always call it the SPV setup, special purpose vehicle setup, which has a little bit more security to us. And lately, we also get approached even by lending companies directly because they heard of us and they ask, hey, can we not collaborate in any way?
Yeah. Absolutely. We actually, my company, Keeper Solutions, works with embedded finance and embedded lending in the US. There's a company called Moment that does point of need lending, and it's very popular for kind of loans $25,000 to $30,000. But that kind of embedded finance seems to have been a very good model. Do you find that your credit is going out to providers that are involved in embedded lending as well?
Actually, we had one project which unfortunately did not really get through, but this was basically a next level embedded finance.
Yes.
But at the moment, we don't have a project in this area, unfortunately. But it's for sure the future. So let's see.
Yes, absolutely. So it's a very competitive landscape out there that you're in. Although I know that within, say, the fintech domain, I think that the tech-enabled lending is one of the spots. Could you give me some insight into how you've been able to innovate to support your business model and to keep ahead of the competition?
Absolutely. As I mentioned earlier, for us, it was always in this field, in the private debt field, it was always clear we need a digital solution because with just doing everything manually, that would just not work. Lucky for us, one of the founder has worked with Credit Suisse in the IT team. So he has knowledge not only from the IT side, but also from the financial side. He was in the structured products
Okay.
team.
Yeah.
And so we just asked him, look, what do we need to make this or to transfer this, let's call it old fashioned asset management business into a tech driven asset management or tech driven company? And then we just sat together and looked, and okay, what do we need from, what can we do ourselves? And
Yes.
what do we need from our counterparties? Because all these platforms we work together and these businesses, they need to provide us with the data. Without the data,
Yeah.
we cannot do or cannot use our software. And so in the early beginnings, it was really hard to get the platform to understand what we really want, because they say, look, in our account, you have all the data, you can download an Excel, you see how much you've lent, how much interest you've earned, but they never understood why we need an API or another interface directly to their system, because we don't want to download Excel and then put it somewhere together. We want directly from the
Yes.
source, we want the data. And
Yeah.
just maybe one quick side note, with one project, we even got as far that as that we also receive the underlying cash flows directly from the bank statement. So we have a direct API interface to the banks, and we see whether a borrower has paid or not, and whether this payment has been forwarded to us.
Very great
Counterpart
visibility.
cannot
Yeah.
just say they never paid, because we know he paid. And this is probably the future, not set in stone yet, but probably the future will go as far as to be as transparent as you can be.
Yeah. Well, I mean, look, I think the business model is fantastic, and I think the trust for investors is very important, that they have confidence, because then, and then I think that transparency can help build that trust, and getting that granular transaction data, being able to categorize the portfolio that's out there into, on time, grace period, 30, 60, 90, and so forth, would be able to give people that confidence how it is performing. And so you're providing APIs, great. But are you getting that transaction data is it from lenders through kind of PSD2 kind of open banking means, or?
It depends a bit on the business partner we work together. Some of them don't even have an API or another interface. So in this case, we created or developed our own crawlers and scrapers. So we collect the data with our own tools. And with the most platforms in today's world, fortunately, they have an API which we then can collect the data.
Yes.
Sometimes some of the data points are missing, which we would like to have. They are not in the API or not available through the API. But in most cases, then we can just sit together with them and say, hey, look, we're going to make a big investment. Let's figure out how we can get also these lost data points from you.
Okay. So it sounds like there must be an awful lot of integration going on between, getting your funds in from your investors, reporting back to them, and then putting your funds out into the different lending channels and monitoring them.
Absolutely. This is basically the most part of our business, is integrating the platforms. I mean, you probably know it's every day there's a bug which needs to be fixed or something, an error message. And this is one of the reasons why most of our staff is IT. They are coders and
Yes.
senior ITs.
Great. So yeah, you had mentioned earlier on, so that I hear you've got sort of the investment side, you've got special purposes vehicles, and then you've also got your tech team there. So and is that do you keep that all in house in Switzerland, or is it a mixture?
Yes, to the first, we keep it all in-house, because mainly due to our CTO, he always said, look, we need to have it in-house, because up to a certain point, it's okay to use, let's say, freelancers. But if something needs to be fixed or a new feature needs to be implemented, you want to have it in-house and you want to have it right now. And, customers pressing or investor pressing, we need that feature.
Yes.
So it's better to have it in-house, and therefore we opted for the solution to have them in-house. But as you can imagine, Switzerland is quite an expensive
Yeah.
country. So
Yes.
we use now Kosovo for our developers.
Excellent. A beautiful part of the world and close enough to yourself as well. So
Yeah.
that's good. Now, we're seeing, of course, in the last 2 years, I know that there's been machine learning and all kinds of AI technologies for many years, but we've seen nearly a Cambrian explosion of AI with generative AI and agentic frameworks, LLMs. May I ask, have you started experimenting with using these kind of newer types of AI in the business? Are you thinking about kind of use cases?
Yeah, we've discussing a bit, or have discussed also in the past, of implementing and how we could implement it and how we can best use AI in our
Yes.
field.
Yes.
We did not develop any tools yet or implement AI in our, let's say, daily business yet, because there were just other projects and other stuff to do.
Yeah.
But for sure, whether it's the due diligence process or early warning signals in portfolio shifts, from this
Yeah.
bracket to delayed and then defaulted, whether an AI could prevent, and with historic data, I mean, we have lots and lots of data. So maybe they can see a pattern which we cannot see. And this is certainly something we were discussing, and we will implement it in the future, but we did not do it
Yeah.
because there was just not the time.
Yeah, absolutely. And I've been speaking with many fintech founders, and from what I can see in the market currently, there's maybe about 5%, at least in the US and in Europe, the ones that I'm speaking to, that actually have Gen AI in customer facing kind of core product features. Now, everybody are using LLMs as part of their daily business, so people understand the potential of them and also the risks and limitations. What we're also seeing is that there's some newer fintechs that are coming to the market, say in the last couple of years, that are kind of nearly LLM native. At least parts of their product are kind of LLM native, and they probably make up part of that 5% of fintechs that actually have it out in production, from what I've seen. But that there is an appetite, and I think that the founders like yourself, they're looking at it and they're thinking of the potential, so that maybe looking initially at the back office, or internal technology use cases, or other internal use of it initially to get comfortable with it, because the reputational risks of rolling it out, and your business is based on trust and your reputation. So anything that gets out there, you have to be 100% confident in it, or at least 99.999.
Absolutely, and it's a little bit like a double sword or double-edged sword, because on the one hand side you cannot miss out, on the other hand,
Yes.
if you're a bit lazy and maybe cutting edge and just implement something which is not 100% safe, or you're not 100% comfortable with it, then it can backlash quite heavily.
Yeah, absolutely. So, just looking ahead, then, could I ask you about where do what does the next 12 months look like, first of all, for you?
I mean, we see quite a shift in the private credit market, so that private credit gets really interesting, or investors get really interesting in private credit in the last couple of months. Even in Switzerland, I mean, we are discussing now negative interest again, and so any investor is happy to have opportunities to get and not pay negative interest to the banks, and so we see quite an increase in interest there.
Yeah.
So we need to push together with our asset management business partners the assets under management in the financial products. And on the other hand, we see also this shift to more transparency, and that Excel is not a valuable solution for handling large credit portfolios anymore. And so we see quite an increase, also a demand in our software. And this is also why we now try to make the look software a little bit better and to make it user friendly, because we don't want to use it solely for our internal purposes, but also as a SaaS model to subscribe or let others subscribe to it.
You're using it yourselves, but you've got you're licensing it out to third parties to use it as well.
Exactly, and mainly credit funds which struggle with the problem having thousands of loan claims in an Excel and not knowing whether this Excel is really correct or not, because in Excel, I mean, you just put in numbers and then
you could even have two versions of the same Excel file.
Exactly.
Slightly.
Yeah, exactly.
And then if we just look ahead then for maybe the 5-year horizon, what does your strategy look like in the longer term, do you think?
I mean, in the longer term, for us, it makes sense to collaborate with bigger fund managers, especially with the software, to just offer a software solution also maybe for other types, private equity funds or other types of funds or financial instruments.
Yes.
Basically, all types which have a granular portfolio as underlying.
Mm-hmm.
Because our software is made for such granular portfolios. Just to give you one number, in one fund, we have over 17,000 different positions. And so every position has an investment, has monthly repayment, has interest payment, a fee. So we gather quite a lot of information and data.
Yes. Wow. Yeah, that is very very complex. So you're keeping track of a lot of things there, but a lot of data as well, which points to a lot of potential further value that you can exploit.
Yeah, exactly.
Well, look, it's been fascinating to learn about your business. I think it's a very hot space. It sounds like you've got a great niche in there and are well positioned to grow that. So thanks so much for letting us take a look inside what you're doing. I really enjoyed it. And thank you.
Thank you, Reg, very much for having me.
It's a pleasure, Dominik. Thank you.
Thank you.